Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Vick.
I've bidden a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday morning edition of Benzinga's PreMarket Prep. Hope everyone has had a good day so far. Spencer Israel. I'm here with Joel Elconin and Dennis Dick. Got a good show for you folks today. Again, earnings will be the story of the day. We've got Mark Chaikin to talk us through some of them at 8:15, but we've also got a lot of stocks reporting this morning and a lot more big ones reporting after the bell. Amazon, Google, Intel, Microsoft, to name a few, and we'll get to as many takers as you throw at us in our live chat as we can. That's at premarket.benzinga.com is where our live chat is at. Joel, give us some quick levels in the markets and we get to the earnings.
We've come all the way back from the depths of 25.4150 yesterday, trading back in the 25.60 handle. I want to see what happens at Wednesday's high is 66 cents a quarter, if in fact we can get there. We have crude flat at 52.18, and gold just can't mount a rally, down $2 at 12.77, and silver at 16.94. Dennis, how you doing this morning?
Busy, man. Busy. I have a million trades on right now.
A million? But listen.
Trying to work out of trades, trying to do a live radio show. It's going to be a busy day for Denny.
Okay, listen.
Busy morning.
Okay, just quickly, I know we have some earnings reports, and I know I don't give you advice on your portfolio very often, but okay. I think this is what you should do. You should sell out of your 10,000 shares of General Electric, okay? Get flat, and there's only one stock for you to buy to add to your portfolio.
DryShips.
Yes, DryShips.
You know what the funny thing is? And I've been kicking myself a lot lately. My butt is getting sore. I look at my sheet from yesterday. I have DryShips written on my sheet as showing life. And I wanted to talk about it on the show. And we just had so many earnings reports, we never got to it. And of course, it blasts off. So I literally had it on my sheet to talk about and circled because it was starting to show life the day before. Obviously, you know, I'm a fan of the 2-day move. And man, was that ever a 2-day move yesterday. Look at the blast off for DryShips.
Spencer and I have been dissecting the fundamental information that's been out on it, and we're going to work on an article later today. But what you have to do, and here's the real key, Dennis, I've been interpreting this page here from the DryShips Inc., and this is the Baltic Index and the rates and everything, and I don't know what the hell it says, but if anybody can interpret this, go to the BalticDryShip.com pages, and there was an article in Forbes Contributor, in the Street, so there's some nice hype going on in it. I'm going to figure this out today and figure out what is actually going on. I don't know with the shipping, but
well, the article in Forbes and the article in the Street are by the same person. So his name is Jim Collins. He wrote about it, DryShips in the Street on Monday, and he wrote about it in Forbes yesterday. So he's pretty bullish. He said this is his trade of the week. So if you're interested in DryShips, I would check out those articles.
All right. We'll see what happens today. Got over that critical $5 level, $5.59. Dennis,
going back this morning.
He's going back this morning. Of course, I'm talking tongue-in-cheek. Is there a place where you would ever buy this thing?
No, swing trade, yeah, because I had them written on my sheet. So, yeah, for a day trade, sure. Never in my investment portfolio. I've seen what has happened to every person that has put this in their investment portfolio for more than a week. Seems like they're down. But that being said, stock hasn't went down 2.5 months. So it hasn't been killing anybody lately. It's usually just killing all the longs, and it hasn't been killing them. And it's showing some life here. So we know we've seen crazy short squeezes in this before. So not coming in here shorting it either. I'm probably just hands off. I mean, I think yesterday morning was the move. Yeah, that little bit of life, and I love the follow through the next day. We actually got that DryShips. Would have been a good trade. Did not do it, probably just because it's DryShips and I'm scared of it. But the second thing is probably just because there's a lot going on. I mean, when you got 240 earnings stocks reporting today, 150 yesterday, I mean, we're so busy with earnings here, it's hard to pay attention to a little stock like DryShips.
Final words, forgot the $5, right? That psychological level. Institutions can own it if they want to own it. Hit 559, closed at 5, trading down to pre-market. I'm going to keep an eye on that $5 level. The next stock here, that is a stock that I guess I've been touting for a long time because I have it in my investment portfolio, but didn't play any out of the money options on it yesterday, but Twitter. Give us the Twitter report.
Wow, yeah. This is one that was interesting too. I could not bring myself to buy it ahead of earnings just because it often disappoints. We saw last time stock went from $20 down to 17. But this is the type of market that a stock like Twitter, when it reports, might do okay, because we've been talking about the laggards. When they report, if they were just coming in line even, they're bouncing. And if they're beaten, they're really bouncing. And that's where you're seeing Twitter and Buffalo Wild Wings both this morning having big pops. And the leaders, when they report, they got to absolutely blow it away for them to go higher. And if they do not, they go down. So it's been a laggard market earnings season.
So
you want the Twitter number?
I want to hear the numbers.
Okay.
Give them.
EPS of Twitter, 10 cents versus 7 cent. Estimate sales of 590 versus $586 million. MAUs for the quarter ending at 330 million users. That was up, I believe, 8%. I think I read that, but I don't have it in front of me right now. Q4 adjusted EBITDA coming in at $220 to $240 million. This is their third consecutive quarter, folks, of beats on the top and the bottom.
Actually,
yeah, they beat on the top and the bottom last quarter and they killed it. Why? Because they had run up into their earnings and everybody was liking it then. It's all about killing the masses and everybody's hating on Twitter. Well, let's rally that. Let's be honest. Didn't AMD just report a 10 cents versus 7 cent quarter, almost the exact same on earnings? And you saw the reaction there. The difference was AMD is a little more loved by the street than Twitter is, and AMD gets killed on their earnings. So it's not even about the numbers themselves. It's about the sentiment going in and then the interpretation of those numbers. And when you've got the crowd all bullish as stock and they're all sitting on the long side, the shorter term traders, they usually go take it the other way. And that's the way this earnings season has worked.
I pulled up the earnings reports here from Twitter, Dennis, and on the EPS, this is since the company came out. They had one inline report. The rest have been beats. The revenues have been up and down. And this has been Sean Udall's argument that they're underappreciated for what they've done. Expectations have been much higher and they haven't grown their revenues, yada, yada, yada. But here it is. I mean, you look at this report, you don't think it's a stock that's gone from 72 and change down to 74 and 73. That was the all-time high. I came in, I forgot about the report. Spencer told me, I'm like, man, just got to be lifting offers in that thing. And it was at 1850. And man, I missed the boat. I don't know what to do. Got over $19, $19.12 pre-market high. Now I'm like a deer in headlights. Are we ever going to get back down to 1741 to fill the gap? I don't know. Just hopefully they just reverse hard off this, because I told Spencer that was my strategy, man. If this thing can get back anywhere under 18, I want it. It's hard to chase here, but currently trading 1879, 1912, the pre-market high. This is what I'm gonna do on this one. If I can't get it out on the cheap, and for somehow, some way, it busts above $20 and closes above $20, I'm gonna buy it on strength. So those. Just it's a psychological level, hasn't been up there since July when all the takeover rumors or stuff. That's my strategy for Twitter.
I have never made money chasing stocks, so I will not be buying Twitter up $1.50 in my investment portfolio there. I've seen multiple times, if you look, every time this thing gaps up, and, is there eventually going to be a time where it continues to move up? Maybe. I don't mind Twitter in the teens, like the mid-teens. I've said that multiple times. 17, I don't know. 18, 78, I'm not chasing it. And, here's, the way I invest. And this is completely different than trading. You're trading this, you can go with momentum. I mean, as a trader, you almost have to be with momentum because momentum trades at work. But as an investor, when I come in, and I think somebody said this yesterday, when I come in when there's blood in the streets, when it's getting ugly, what I'm looking at as a possible investment this morning, and actually Spinner just said it, is Celgene. I have Celgene in my investment portfolio. I don't usually add to losers. This is a big winner for me. So I'd be adding to a winner. I'm actually averaging around $29 in Celgene. And I'm contemplating adding more to it if it comes back down to $100. It's 107. This thing's fallen off so much in the last little bit. They still got a great pipeline. It's still one of your biggest biotechs. We still got an aging population. Is Celgene going to continue lower in the near future? Maybe. The momentum has totally turned against the biotechs. If you look at the IBB, it's a disaster here, probably because you got the couple main guns, Biogen and Celgene, getting killed. But that being said, long term, you stick in Celgene in your investment portfolio at 107. I think when you look at it in 5 years, I think you're happy that you did it.
And what's the news on Celgene today to continue?
It's earnings. And so we had the bad drug news, which I honestly thought was overdone. I thought it was worth maybe 10 points, went down 20 or 15 points. It's continued to leak. And now you have the follow through. Not surprising because, this stock is hated now. So they'll interpret it in whatever way they can. I don't even know what the numbers are yet, but it's not surprising that they hit it regardless of the numbers. What's the number, Spencer? Celgene.
Celgene, $1.91 versus $1.87, and sales of $3.28 billion versus $3.42. So mixed from Q3 for the fiscal year guidance that came out. That's in line. EPS is in line. Revenue for the fiscal year is in line as well.
And the stock obviously trading down significantly here in the pre-market when we check out Celgene, 107.56, one of your big losers of the day, down 10%. Come to pop out $100. I'm going to buy more Celgene. I don't usually add the winners. I don't usually add the losers. I might add to this winner actually in my investment portfolio. This gets down to $100. I think I'm sticking more in my investment portfolio.
All right, let's talk about what Dennis is looking at here. First of all, the pre-market low 106.20. 107.56 is your last print. So be keeping an eye on that pre-market low. Of course, for either a bounce or follow through on the downside, like CMG. We can talk about that if we have a few minutes later on. You've taken out. I have to go to the monthlies here, and Dennis is giving you a good number, folks. Back in November of 2016, this low had a low at 100.92. I can show it here on the weeklies. This is the 100.92 low. That was a big bar. Oh, it's actually way down here. So it's going to back and fill here. I mean, obviously Dennis is not out there buying this off the open, expectingly to go immediate back up. He's looking at a long-term time horizon, and that's not a bad.
I'll just say, even if you were buying at 107.75, I think you're even happy at this price 5 years from now. I just think you've come this far. I think there's a good chance you might test that $100. So why am I going to pay up $7 if I think I'm going to maybe potentially get it at 100? So it's completely out of favor right now. Can it bounce? I mean, yeah, it can bounce because you look at Biogen yesterday, BIIB, got all the way down to that big psychological 300 level, got down to 301, and then bounced $10. So that's 2 days ago, actually, on their earnings report there. So these things do like to bounce at the big psychological levels. Maybe you got to step ahead of the, maybe other people think on $100. Maybe you got to step ahead at 101 or 102. But I do like Celgene down here as an investment, as a long-term investment.
All right. Let's get one more or two more earnings reported before Mark Chaikin joins us.
There's just so many. Let's go to Ford. Ford's trading up here in the pre-market. I'm looking at it here. The only thing I'm thinking now, GM had a great report, and they actually hit it afterwards. Now Ford's trading up here. We're 12.25. Your book thickens up 12.30 to 12.50. I don't know. I don't see that much upside. I wouldn't be surprised if this gives it back or gives some of it back.
43 cents versus 33 cents is the EPS, so a nice 10-cent beat. Sales of 36.5 billion versus 32.8 billion, so a nice beat on the sales as well. Fiscal year EPS coming in higher than the estimate.
Dennis, not to correct you, but I'll correct you. It ran up after earnings. It ran up earnings day and a few days after. It was the downgrade from Morgan Stanley that got it.
Isn't that crazy? Stock can have, that nice move up, and a downgrade is more powerful than those great earnings.
Yeah, right. So
those analysts are influential.
It varies. I mean, it depends. I mean, your selected analysts, we could do a whole nother show on that. Different analysts moving different stocks. Ford's easy here. I'll just give you the pre-market trading activity. Ford's hit 1230, but just look at the dailies here. There's just a wall here at 1240, 1246, the high of the move. 4 highs in that one area. Then we broke down under $12. So that's what I'm looking for. Clear 1240, maybe even clear out the paper at 1250 and get a close above that, then greener skies. But this did have a nice run. It just kind of tailed off into the report. Spencer, 815. We're calling Mark on the hop.
Actually, we're going to call an audible, and we're going to call Mark's wife, who's also an investor.
Really?
Sandy Chaikin. So we'll be right back with Sandy Chaikin. Welcome back, everyone, to Benzinga's Pre-Market Prep. I am Spencer Israel, joined by Joel Elkanin and Dennis Dick. We're on the line with Sandy Chaikin. Her husband is Mark Chaikin, who's on our show pretty frequently. Sandy is also an investor, and she also uses Chaikin Analytics. And she's here with us now to talk about how she finds winning stocks. Sandy, how's it going today?
Oh, it's great, Spencer. Glad to be on with you. Thank you.
Sandy, you are giving, I believe you're giving a webinar today. Why don't you sort of later at I think 4:15 Eastern time is that webinar? Why don't you give us a quick rundown of what that'll be about?
Sure, happy to. Well, it's called How to Find Winning Stocks. And what I've done since I started using Chaikin in 2012 is build a portfolio of winning stocks that have consistently outperformed the S&P and most money managers. So I share that 5-step methodology with our attendees and show them as if they're looking over my shoulder. You know, they can see exactly what I'm doing. I use examples from my own portfolio like D.H. Horton, Elbit Systems. I mean, these are a couple of the stocks that I'm in right now, LPL. And I show them how I found these. You know, what was my criteria and how did I go about identifying these stocks, and then knowing the key is knowing when to buy and, of course, when to sell.
All right. Now, obviously, you'll go into greater detail about that on the webinar, but why don't you give us a short little rundown of how exactly those 5 steps work or what they are?
Sure, you bet. Well, the foundation, of course, is the Chaikin Power Gauge rating, which is the stock rating model that my husband Mark created after spending 45 years on Wall Street. So he took all of that knowledge and culminated into a 20-factor model that is a very reliable indicator of where a stock is headed over the next 3 to 6 months. And it goes into a very simple rating from very bearish to very bullish. So I start with that. I only consider stocks that have strong power gauge ratings. And then we have what we call a classic bull scenario. And for a stock to be part of a classic bull, it needs to have obviously a strong power gauge rating, strong relative strength. You know, that's our rating of relative strength relative to the S&P 500. And of course, Chaikin money flow. That's the indicator Mark created some 35 years ago on Wall Street, which is now on every stock charting package worldwide. So you want strong money flow because you want the institutions buying a stock that you're considering buying. If they're selling, that's no good. So all of these 3 criteria have to line up. And of course, it needs to be on a rising price trend. You don't want to buy a stock when it's dipping down as so many of those energy stocks and oil and production have been doing lately.
So, Sandy,
so that's the foundation.
So what exactly is your time horizon then? Are you investing for, are these like swing trades? Are these investments that you plan on holding for a year or 2, or what is the horizon that you use?
It's usually a swing trade, Spencer. I usually am in a stock anywhere from 1 to 6, 8 months. I have found that the buy and hold doesn't really work that well because every stock seems to at some point go through some, degradation. And at that point, I'd rather have that money invested in a stock that's a classic bull and trending up as opposed to watching it go down. So, I talk to so many beginner investors who say, "Oh, well, it'll all come back. I'm just gonna hold on." And that was my Achilles heel, taking that advice in 2008 by holding on to stocks and the mutual funds in my 401k plan that dropped, by over 40%. So I'm like a true believer that buy and hold is not the best approach. So I look at the indicators. I mean, it's a very simple rules-based methodology. I always ask on my webinars, what is the biggest challenge you as an individual investor are facing? And 70% of the people always say when to get in and when to get out. And that's really the key. And you've got to be able to identify when a stock is breaking down Or on the flip side, when a stock is peaking, you want to take your profit. I mean, like D.H. Horton, for instance. I've had that stock since June. It's up dramatically in the 45 percentile range this year, which is great, but it's bumping up against its high volatility band in our system. And that to me is a signal that, hey, you might want to take your profit now and exit. So I go through that in my webinar. How do I know when is a good time to take a profit? And how do I know when a stock is breaking down and I should get out before it drops further?
So in a sense, you would rather sell early and take some profits than hold on too long and lose some of those gains. Exactly.
But in our system, it's color coded. I mean, the power gauge rating, goes from red in the bullish zone to green. It's like a GPS for your stock. It tells you where the stock is headed. I think of it as a gas gauge, though. I mean, it's an old-fashioned gas gauge. It's a very simple indicator, but there's an awful lot going on underneath the hood. When that power gauge turns neutral, then it's time to say, wait a minute, there's 20 factors that make up this model, and they're now pulling back a little bit. I've got to pay some close attention. So, for instance, one of the key rules for when I sell is when the power gauge turns to neutral and another indicator like money flow or relative strength turns negative or neutral. That's when I say, wait a minute, this stock, is giving me some warning signs. Now would be a good time to take my profit, get out of the stock before it drops further. So it's very rules-based, and I actually have a guidebook that go through these 5 rules that when you register for my webinar at ChaikinAnalytics.com, when you register today for my webinar, we will give you that guidebook on the webinar itself. So you can print it out and make your notes and follow along with your own little workbook.
Yeah, we actually have. I want to make sure I'm reading this correctly. We have someone in our chat who says he's using or he's looked at the Chaikin gauge specifically for Celgene, and that the money flow has started to turn negative about a week ago, and Celgene had earnings today. So there we go. But I want to ask. Actually, Joel, you had a question.
Sandy, Joel Elconin here. Couple quick questions for you. Were you involved in the financial markets? How long have you been involved? Did you have another profession before you got involved in the markets?
Yes, I did. I am a newbie to finance. Believe me, I never took a finance course or a stock market course or anything that had to do with finance and numbers and economics. I was in the marketing field in the cosmetics business. I worked for L'Oreal and Elizabeth Arden in New York, marketing their designer fragrances. So, I come from a very strong marketing background. And when Mark and I started this company in 2009, after the whole financial meltdown, I said, honey, I don't know anything about stocks, but I do know marketing. So, if you can guide me on, the stock side and the finance side, I can help market this product. So that's really it. And then I'm a firm believer that if you're going to market something, you damn well better know how it works. So I had to get up to speed and learn this. Also, I was determined to learn this regardless, because as I said, I lost 40% in the 2008 meltdown. And that really, after I was devastated and turned angry, then I turned resolved to learn how to do this myself so that I don't have to depend on somebody else for my financial future.
I was just going to ask you what that initial conversation was between you and Mark, to get you to make that transition. Is it just something you just approach with open arms because the financial world was in such chaos?
Yeah, basically, yes. Mark and I were just getting together as a couple then, and he could see my distress in 2009, and he could see my lack of confidence, because I felt that the wealth manager knew more than I and was the professional in the room. I felt like I should obviously defer to him, which I did, and that was to my great detriment. And so after that, Mark said, there's I think the number was like $4.2 billion in 2009, something like that, that's come out of traditional brokerage firms like you, Sandy, and gone into self-managed accounts. Like I set one up at Vanguard and stuck it in an S&P 500 until I could figure out what to do. But he said, you're not alone. I mean, there's literally millions of people with billions of dollars that are doing the same thing. Yet you guys don't know what you're doing. You don't have the proper tools and you don't have any experience managing your money. So he said, I'm going to come out of retirement. He had sold his company to a division of Reuters and was retired for 10 years. He said, I'm going to come out of retirement so that I can use my knowledge to build something that's just as strong as I did for the professionals, but it's in a simple enough form that someone like you, Sandy, can understand and know how to use it. That's what we did.
We've been on the line with Sandy Chaikin. Sandy is the co-founder of Chaikin Analytics. She's giving a webinar today at 4:15 Eastern Time. You can go to chaikinanalytics.com. That's CHAIKIN analytics.com to catch that. Sandy, thanks so much for hopping on with us today.
Hey, thank you, Stuart. Happy to be on your show.
S&P futures trading up 250 at 2561. Dennis, you banging out some trades there, cleaning things up?
Yeah, we're trying. There's a lot of action here. I tell you, this market is crazy here this morning, at least in individual stocks. And you know what's always funny? S&P still find a way up because there's a lot of stocks that are under some significant pressure today. Like we've already talked about the biotechs, they're under significant pressure. But whenever there's, the leaders, become laggards, well, then the laggards just become leaders and it picks up the slack. And the stock we haven't talked about yet, another stock I'm kicking myself for, like I said, my bum is getting sore because I've been kicking it so much today, Buffalo Wild Wings. If I look at my sheet from yesterday, I had two stocks, I had DryShips written on there, and I had Buffalo Wild Wings written on there because I wanted to buy it ahead of the report in my investment account. I did some analysis looking at BWLD, and I kind of liked it. And I was like, you know what? This fits the description of a stock that has been unfavored. And if they report okay earnings, this thing's going to pop. They not only reported okay earnings, they blew it away. And that's why I've seen a big pop in BWLD. Spencer, give us the details.
BWLD reporting yesterday after the bell there. Q3 EPS $1.36. That may not compare to the 79-cent estimate, or it may compare with sales of $496 million versus $501.5 million. Comps for Q3 were down 2.3% at co-owned restaurants. These are restaurants that they own with a franchisee, but they are raising their guidance for the fiscal year. They're raising their adjusted EPS by about 35 cents.
It's a big pop here, and its thing got up to 125 last night, so it was actually come off the highs 8 points, but it's still up big time. I don't know. I just was looking at this, and I don't have a lot of restaurants in my investment portfolio, and I was like, this would be a good one. This would add a little bit. It's come way off. This was one, that was all the growth investors had to have it when it was going 150, 170, 200. And again, just like we talk, there's always that lag when you go from growth to, the growth investors stop buying. It takes a long time for the value investors start to sniff around. I'm a value guy. I started sniffing around this at $100. I don't know if I'm getting another shot at this or not. I'm not going to get another shot today, but maybe it comes back down eventually. I like it long term at $100. 117.95. It's kind of up too much for me to chase it now.
But if you had it in your portfolio and you put it in yesterday, would you be taking it out of your portfolio?
No, I don't think so, because I was going to put this one in there for longer term. Yeah, and I try not to trade this wasn't going in a swing trading account. This wasn't going in a day trading account. It was going in my investment account, and I have to keep it separate. Because the trader blood in me, the scalper blood in me would make me sell all of these stocks. I would never be up 600% or 700% MasterCard. I'd never be up 400% Biogen if I kept these in my trading portfolio. I would never be able to hold them that long. When I like it for a trade and investment, I put it in both accounts. I'll go long in both accounts. But as an investment, I try not to look at the investing account. The only time I'm usually selling out of the investment account is usually when my thesis has changed. When I, think this company, isn't as good as it once was. That's why, I've been analyzing GE a lot, contemplating after 17 years of dumping it just because dividend could get cut. But then, you think about it and it's like, are they going to figure it out here? I did take GE down to $6 in the financial crisis, rode all the way back up to 30. I don't want to write it back down to 6 though.
Why don't everybody in the chant and Spencer Stu will start yelling, DryShips, DryShips.
That is not going in my account.
Yeah. You're going to be saying that at 10, 15, 20. That is too. I mean, you talk about buying stuff on strength, and it was a great example you gave with that VRX. The chat was all over you for not liking it at like 18.5 or whatever. But sometimes it hurts you. And that's why, and I'll give you the best example. I really thought about GM at 35, 36, 37. Then my next thesis was, well, let's see if it could hold 40. And, here I am waiting for the gap fill to come back down to 39 and change. And then, instead of sticking with my thesis, okay, I'm going to try it, buy it again at 35. If it breaks out over 40, then I'm in. If I would have followed the second part, had a 2-part plan, it doesn't always work out that way. And boy, I sure hope Twitter doesn't make me buy this thing at $20 because that would really, for all the times I've owned it in, shorter term in the teens, longer term, I think I'm in from like $17 or whatever. But
I just want to say, while you're talking longer term stuff, Celgene is almost $100 here right now.
Ooh.
We just actually kissed down to 101.71. We've had another little washout. Maybe they said something on the conference call just now, but this thing just had another whoosh. $100 looks on the table here today, and I hate buying stocks when they're going straight down. The value in this thing, though, at $100 seems great.
He's pounding the table.
I'm not putting it. I am. I'm hitting the table. I'm literally hitting the table. I am not putting this in my investment account, though, or in my trading account. This will be in my investment account because I think the momentum going here could end up going a lot lower before it goes higher. But again, I don't go on margin in my investment account, so I can hold for a long time. When you're on all cash, yep, not using margin in your investment account, you can hold. They always say, the market can stay irrational much longer than you can stay solvent. Well, not when you're not on margin.
That's a good one. You should tweet that out. Just real quickly, the BWLD did hit 125.50, and that was definitely an overshoot here. What I'm looking at, the more relevant number to me since we came off is 120.80. That was your low on July 26th of this year. The next day, it carried down to 109.05. I have to believe that was an earnings report. That fills the gap from then. I think a lot of people that bought it under 120 down to 100 are thinking, boy, oh boy, oh boy, I'm glad it's back up here. I'm just cashing out. So just from a shorter term perspective, the gap to fill. And Dennis, I think it was yesterday. Did you see the Walgreens boots? No, it wasn't yesterday. Was it? Yeah, it was. Did you see the range in that thing off the open?
Wild.
Look at that. Holy moly. Took it all the way down, cleared out all those buyers at 67.
Yeah.
Turned around on a dime. And there's a crazy move if you have ever seen one. Look at that.
Went all the way down and made a new low, and then all the way started to climb back up again, too. Wild. And that's just lack of liquidity. It's institutions saying, hey, I don't know what's happening here. I'm hands off. And that's why you have these violent moves. All it takes is a couple big players saying, I want to sell. There's not a lot of liquidity in those opening few minutes, and it will knock the stock down 3-4 points just like that. Even a stock as you think would be as thick as Walgreens, off the bat, stuff is not thick. Even Walgreens. Especially after reporting earnings.
All right. So, all right. Let's just move on. Comcast, is it worth talking about that report?
You can talk Comcast if you want. You can go wherever you want. 240 stocks, Joel. You go where you want to go.
Let's go Comcast, CMCSA.
52 cents is a 2-cent beat on the Q3 EPS. Sales of $21 billion versus $21.04 billion. They're also declaring a quarterly dividend of 15.75 cents.
But that's not new news.
Okay.
They're not like adding a dividend or increasing their dividend.
I stand corrected.
Probably just their dividend. 1.73% what was the yield on it. So do the math. Is that still around the same? I don't know if they changed it or not, but I don't know. This is one that, the reason, AT&T gets hit and stuff, people are finding ways to watch television for free. They watch everything on the internet. Now, are they going to be participating in that? Yes. The DirecTV's got, you can watch DirecTV on the internet now. Comcast will be the same thing. But that being said, that is going to squeeze their margins. The stock has been a monster for a long time. Back in 2011, it was $10, $36. I think long term, I do not like the story of the cable providers because I think the new age, the younger generation is finding ways to watch stuff a lot cheaper through social media, and it is going to squeeze the hell out of them long term. I want nothing to do with this company long term. I think it goes lower.
All right, I'm not.
Don't know about today, but long term, I think when you look at Comcast 5 years from now, I think it's a $20 stock or less.
All right,
bold call. Write this down. We'll look 5 years from now if I was right.
Okay, I'm not going to disagree with you on that thesis. It's hard to, but they got some pipes. They really do. And, the pipes for the internet, I'm very happy with my service. I've called. They've lowered my price. I'm very happy with the service.
But don't you think internet's going to get cheaper too? Like, you get all these other players that are coming in to get it, could it eventually go free? Could you eventually get free internet? I don't know if it'll ever go free, but I tell you, there's a lot of players that can do it cheap. Provide internet service. I always have these, things getting these mail flyers getting me. I have it through the internet, through your email. Always people trying to pitch you on, cheaper ways to get your internet service. I just think they're getting squeezed everywhere.
Like
not
I
only
said,
on TV, also in the internet as well.
And if you call up and you say you're thinking of canceling, I haven't done this in a while, but if you call up and you say, I'm switching to DirecTV, they'll like automatically lower your bill for a couple months.
Oh
yeah. Don't tell them I said that. They've been very good to me. I'm not going to say anything bad about Comcast. All right, Dennis, you got the list in front of you. What's next?
Well, I have a huge list, so it depends on where you want to go. But let's go Amgen from last night, because we've got obviously a biotech disaster here today. Let's go talk Amgen here. That stock is trading down as well. It's down $6 here now. I mean, you look at this IBB. This thing was looking like it was going to break out up at 340. It's now down 321. Now it's at 315, losing another 6 points because Celgene and Amgen are massacring it. Biotech is just suddenly broken, like big time on this chart. You're straight down for 6-7 days here in a row now in the IBB. Amgen is not a stock I want to jump into here right now, simply because Celgene, Biogen are just continue to get whacked here. I think the Amgen, has come up a little ways. It's not down nearly as much as the Celgene is. I like Amgen down in the 150 area, 170, 90. It's too high for me still to come in as an investment.
Sentiment trumps guidance, trumps earnings, and that's shown here today because this is a good report. $3.27 versus $3.11 for the Q3 EPS. Sales of 5.8 versus 5.76 billion dollars. They're also raising their outlook for the fiscal year. So good numbers all the way around. The EPS got raised to $12.15 to $12.65. That was the original range, and they upped it by about 35 cents on the low end of the range. So they're increasing their EPS for the fiscal year, and it doesn't seem to matter today.
Not today. This is the day that if you're reporting earnings and you are a drug stock, you are in trouble. Bristol Myers here reported too, and they weren't that bad either, and they're down too. So it's the punishing of the drugs here today.
All right. This one, we're trading right at the lows of the pre-market session of 170.50. So no reason to be jumping out and buying it right here. But just want to alert our traders that on August 28th and 29th, we had a pair of lows right here, 70.26 and 70.35. And then on the 25th, 169.40 was the low. So 170, that's an area of potential support, a psychological level. Beating that 168.57. So I think just longer term or the next couple of days, let's see if we can hold this 170. There were prior lows in that area.
Jump over here to a couple of the airline stocks that are reporting here this morning. Did we get love? LUV was on the calendar. I haven't seen them cross the tape. Did we get Southwest Air?
I thought we did. I thought I saw.
We got American.
Come through my
American
timeline.
Came out.
Yeah, we got love. Southwest was 88 cents as a 1 cent beat. Sales of 5.3 billion versus 5.31 billion. So.
Okay, that doesn't sound good enough. And stock was already breaking down yesterday. A little bit weaker here this morning. Then we had American too. Do both these together because American's trading up $1 here. They must have said something good.
American had Q3 EPS of $1.42, which is a 2 cent beat, and sales of 10.87 billion versus 10.88 billion. So yeah, also flat.
AAL trading up $1, LUV trading down about 50 cents. Joel, thoughts, concerns here? A couple airliners going in small opposite directions.
Well, the AAL is it's had a nice pop up here to 52.07, but Dennis, is there an iceberg there? Is there something going on? Because on the last
52 is just holding.
Yeah. There's like over the last 45 minutes, sellers
not moving. Yeah, 52 just says come to Papa, not moving. And when you see a bid like that, it's some institution that wants to buy the stock. You don't know when they're going to be done. You don't know when they're going to be exhausted. But as of right now, I tell you, it's 200 bid. They want a lot more than 200, and they're sitting there and buying stock. You follow the big money. You listen to those Chaikins. I make money sometimes just looking at the icebergs, and sometimes those hold, and sometimes the stock goes the other way. So, just looking at it from that perspective, maybe this 52 guy, says maybe he's done his homework here, and this is a pretty good quarter.
You know what? Now, you see, I'm taking the other side of it, and I say there's a big seller at 52.10, and he ain't moving.
Oh, there is. No, there is a big seller at 52.10, so you're boxed in here right now, but he's showing his hand. There's 5,000 shares there still, and it's been counting down. So that's why we don't know how big the 52. It's all supply and demand. You don't know how big the 52 guy is because he's iceberg. He's only showing 200 shares, and he's bought like 10,000 shares there. Or I don't know. There's been at least 5,000 shares there. Then you have 5207, 5208, 5209. Everybody leaning on the size that's at 5210. If 5210 goes out, though, you kind of go with the winner here. And that's the way I would trade it. If 52 gets taken out, that's exhausted and stock's going down. 5210 gets taken out, then that's probably going higher. So, this is a battle of, two big institutions here. One's showing their hand at 5210. One is not showing their hand at 52 bid. And I think I go with the winner.
I think I'll go with the loser.
Yeah,
I say this will not close over 52.
Well, there's no, I'm not making a bet here because if you're making the bet, you're jumping the gun. We don't know who's going to win yet. So why make an early bet when you don't have all the information yet? We don't know how big this guy is at 52, and we don't know, if the 5210 is going to have enough to take it out. Well, so I'm going to wait till I have that information before making any bet, even a paper trade with you.
DryShips at $4.90.
Like
no,
Joel's got that gambling blood,
just
background.
I got information. Would you be quiet for a second? I got information too. And over the last 5 days, there's been sellers between 51.83 and 52.24. And not that little guy, just out that guy at 52.10. There have been other sellers there over 5 trading sessions. So I think there's more than one person. I think the guy that's the 52.10 offer is got more to go. And if it goes higher, he'll sell more. If this 52 guy get taken out, he's going to be heading for the hills. So we'll just stay with it. And no wager, 52, like Dennis says, 52 is support for now. If it's taken out underneath, I just think there's more supply in the 52 handle.
Let's jump over here to, we got no bet here though. On this
I didn't do love. Do we want to do love real quick?
Yeah, quickly do good. Give us some numbers of love. LUV.
I hate that pre-market charts. I'm just going to go to the daily, see if I can see anything on the daily. Oh man, what a messy looking chart. Better hold yesterday's low. We were traded under $56 and 59 resistance.
Jump over here to Bristol Myers, another drug stock that reported earnings. We didn't give you the numbers. We didn't mention it's down $1. Thoughts, Bristol Myers? Well, give us the numbers, and then we'll get Joel's thoughts.
Q3 EPS of 75 cents is a 2-cent miss. Sales of 5.3 versus $5.2 billion. They are, however, increasing their fiscal year adjusted EPS by 5 cents.
This looks head and shouldery to me. Especially, with what's happening, and this is big pharma. So, you got kind of like Bristol Myers, Merck, Pfizer, Lilly. Those are kind of on their own. Then you got the biotechs that are kind of on their own, but the biotechs are completely broken down. Big pharma has not broken down yet, but if big pharma starts to take notes here, and if I'm, long big pharma, and I'm long a lot of these in my investment account, but if I'm long any of these in my trading account, I'm somewhat skeptical, I'm somewhat concerned here about the action that's just happened in Celgene over the last couple of days. So that being said, I'm not jumping here buying Bristol Myers here, especially when the chart looks a little head and shouldery to me.
Boy, you did have a bunch of lows, several lows at the 63.50 area. So old support, new resistance coming back on the downside. You got a pre-market low of 62 even, man, and a bunch of lows there just under 62. So potential support resistance 62 to 63.50. And Dennis, you called a good chart yesterday. I didn't even have it on my screen at all.
What was it?
Tesla. Did you see what Tesla?
Oh, I did too. I did see it afterwards. I was like, wait, it was 2 days ago when we had Tuesday and the stock was 343. I was talking to Nick and I was like, talk me out of shorting this. He didn't really talk me out of it, but I didn't do it. And it's down about $18 since then.
This is,
hey, if I keep calling Tesla short all the way, I'll eventually get it, right?
Yeah, but this is one that Spencer asked me about in particular. And I looked at it and I'm like, wow, look at the double bottom, 336.16 and 336.25. Maybe it's a nice look at the downside if we take that out. It opened above it, barely got above the close, and then it was lights out after it took that out. So could have, should have, would have. But now in Tesla, you're looking at only support here. I'm looking at lower 311.22. That looks pretty airy down there. Trading up 240 in the pre-market, but 311.22 is your next daily low that comes in.
There is a lot of overhead supply in this now. I'm a seller of pops in Tesla. And, I'm looking at this and just, as a call, I think, the path least resistance in Tesla is down. It took out that neckline. Unless, you get back up over 340, hard to be interested in this. You get over 340, then the bulls can maybe take command again. But it's got to do that in a hurry, because right now we have a lot of people saying, ooh, this does not look good. Now it's breaking down. A lot of people thinking maybe $300 on this again.
Okay. All right.
240 stocks, chat. If you want to talk a stock,
how many we done?
No, because there is a million of them. Downward Dog wants to talk Kraft Heinz KHC. This did not, I don't think this reported earnings. KHC report? I don't think so, but it's bid up. Did it?
No, they did not.
No, they weren't on my calendar anyways, but it is bid up here this morning. Some of these food stocks are bid up. I mean, you've got the TLT trading significantly higher as well. I'm not sure if there's another catalyst. Oh, we had Pinnacle report, didn't we? Pinnacle reported. So
yes, we did. Pinnacle reported, and they reported a pretty much flat. The EPS was met the estimate of 58 cents.
I don't know. Downward, is there something on this analyst action? I didn't see anything. It's a busy day, so we're missing news because there's so much news out there. But KHC is bid up here this morning, 77.51 right now. Starting to show some life. You know what? The food stocks, I'm just going to say, is they're starting to get cheap. Cheaper than they were. The valuations are a little bit, but the dividends are starting to get attractive. General Mills, Kellogg's, they've all come down significantly here. You know how I like my value. I don't own any of these food stocks. They're all on my radar, though, as investments. As trades, these things are ugly right now. Path least resistance probably still lower. But you start to think, like, if you don't have any food in your portfolio, these things would come down a long ways from those highs. And it was just last year we were talking about mergers. We were talking about all kinds of fun things. Remember when Kraft Heinz had the crazy day back at the beginning of the year when it got all the way up to $97. Now you're $77. Dividends 3.23%. Starting to look cheap to me.
All right, Todd, what you need to look at in this one is the pair of highs right at 77.42 from Tuesday and Wednesday. If, in fact, you clear that, another high at 77.46. If not, I'm looking for the lower 78 handle. So potential move to the upside here in KHC.
UPS, Dr. J wants to talk. UPS is not moving here. This is like a stalemate there after their earnings report. They reported right around 8 o'clock. Spencer, details.
Yep, $1.45 is in line with the estimate, and sales of $15.9 billion versus $15.6. They also announced that they are raising their fee. Let me find the exact number. They're raising their rates by 4.9% later this year. Their shipping rates.
The guidance is okay too. It's all wishy-washy. It's just kind of there. But remember, FedEx had actually a disappointing quarter. It sold off, and they bought it all the way back the next day. So, and even that day, actually. So, here you got UPS, which is an okay quarter. I think investors are like, I don't know what to do because the stock's been running up, and, it's maybe, fits a description of a leader that maybe should be a laggard. But with FedEx leading and, not and disappointing, but they ran that back up, I'm hesitant to short the stock.
Just looking at the resistance more clearly defined than the support, trio lows at the 120.40 areas. I'll keep an eye on that. If we continue to go into reverse, triple bottom at the 117.40 area, see if those levels come into play. And did you guys hear about the celebration? Was it a UPS or a FedEx driver? I think he's been driving with them for 52 years, and he's never had an accident. And
really?
Yeah, 52 years driving that big truck around and wheeling packages. And I think was it all over Facebook or something like that? Where'd I hear that, Spencer?
I didn't see it. I don't know. For once, you know something that we don't.
I just heard that on the radio. Okay, thank you, Stuart.
Okay. All right.
Stuart, I like that.
All right. Let's get back to the earnings. There was a ton that we haven't covered yet.
Where do you want to go, Spencer? We've been
ignoring Spencer.
Yeah, no, that's okay. Yeah, I mean, I have my list right here. I don't know. Let's see. We've already covered most of the big ones. Gosh,
give us one. What's your what strikes your?
What's the biggest stock in your portfolio?
I have 240 stocks that are reporting here today. What strikes your fancy?
we talked about?
Do it.
Oh, you know what? Why don't we talk about some stocks reporting after the bell today? Right. So Google.
Oh, he's gonna take us for
Google. But look, Google, Amazon.
Curveball. I'm not ready for that one.
Google,
I'm swinging and missing.
Google, Amazon, Intel, Baidu, Microsoft, all after the bell today.
It's a huge day, and that is, of the 240 stocks, there's some that are going to report here tonight. Let's talk Google here. Google is trading up $6 ahead of the report here, so somebody's excited on Google. $1,000, which, well, if you're looking at the Google, $1,000, that's kind of where we've been. I still own, this is one of the stocks I've had in my investment portfolio for a long time, and it's helped my investment portfolio a lot because we know I'm a value guy. This has been a value stock with some growth in it. I still like Google long term.
Right. I mean, it's hard. I don't know what the expected move out of this one is, but basis the Google, you have a quad top right at the 1016 area, trying to hold 1,000, double bottom at the 980 area, and then for Google, look at the Googster. Corresponding levels are 997.21 and 990. Just the other thing about Google, and it's just kind of sticking out in my head. Were you watching the ball game last night? And did you see the YouTube advertising and references and stuff? I think that, I know that's one small part of the.
Well, YouTube is like the first, they're like the premier World Series sponsor.
Yeah,
so
I just think this YouTube might be a hidden gem for them. I know that's other aspects of the company, but that just really stuck out to me.
Oh, it was a great purchase.
Yeah,
what did they pay for YouTube? You think about, companies like Facebook paying $19 billion for WhatsApp. What did Google pay? I'm going to Google it right now.
$1.65 billion is
what did they pay for YouTube?
$1.65 billion.
Wow, what a steal.
In 2006.
That has got to be one of the best buys. What would YouTube, if they spun off, just the YouTube business itself, what would that be worth? Think of everybody uses YouTube. 20 that has got to be one of the best purchases. Those guys are just smart there at Google. And they'll find the next YouTube as well. That's why I stick with these guys. I had a friend that worked there. These guys, this is one of the smartest people I've ever met before. And I tell you, they all they do is they got the think tank. They're in there. They play games in there too. It's like the whole environment of it. But they just come up with ideas. People sleep over there. They're coming up with ideas.
The service was created by 3 former PayPal employees, Chad Hurley, Steve Chen, and Jawed Karim in February 2005. Google bought the site in 2006 for $1.65 billion. Hopefully they got hopefully they turned around and bought the Google stock in 2006, and those guys are riding high. But and the alphabet, aren't they supposed to acquire a company for every letter in the alphabet?
That was the only thing they did dumb. Was this name change? I have no idea why they changed the corporate name to Alphabet.
Do you think Benzinga for the B? Do you think that?
I almost sold the stock when they did that. I was like, that's almost enough for me to sell the stocks. I hated the name so much, but I didn't. I stuck with it. Glad I stuck with it.
All right. We've barely have time. We got more after the close. You want to preview more after the close, earnings?
Well, go preview Microsoft. Everybody's going to be watching the Microsoft report too. And then we have Amazon too. Man, there's so many companies reporting. I'll just say $80 Microsoft. That's a big whole number for this stock. Got up to 79.34 the other day. 80 is just a big psych level. It depends on what they report. Ahead of the report, though, I think 80 gives you resistance. After the report, if they blow it away, then they can go higher. Again, Microsoft fits that bill of a leader, though, so they have to absolutely blow it away. If they beat by a penny or two, it's not going to be enough. If they come in line, it's absolutely not going to be enough. And if they miss, it's going to be a disaster. So you have 3 out of 4 scenarios. The stock trades down. They blow it away. It goes higher.
All right. For Microsoft, you just got to be aware that there's a seller lurking in the $79 handle. Over the last 3 sessions, our highs have been between 79.10 and 79.34. All right. And then you had, but you couldn't close over 79. So to me, a day ahead of, the day of the report, big institution, get out of half of my Microsoft position or trim it or whatever, buy it back if it gets hit after the report. So looking at the trio of highs, $79 handle. I don't think we'll see yesterday's low of 78.01 because you really had a negative market. But if you see the close of 78.63, that's a minor support for Mr. Softy.
You know what, Celgene is down below $100. I should have shorted it when I was saying at 107. I think you're gonna get a shot at $100. I made 7 points here on the radio show.
I've told you that before, but
should start doing that when you say, you know what? There's a trading strategy there. When the stock comes down so far, you almost think it's going to test 100. Well, short at 107. Make your $7. Now recover it at 100. Anyways, 99.80 is now under $100. Let's see what happens here. Sometimes they like to sniff. They have to go under the big hole number and then come back up, but. We called the 107 to 100. Now, is the question, am I jumping in here? So much negative momentum. It's so hard to come in here and just buy. And, I've always regretted too, usually when I come in here just buying. But I do like this long term. It keeps getting cheaper, though, by the minute.
I keep going on my chart. I'm like, wow, I got to find support. Here. All right, Dennis.
Let's get support down at $29 where I bought it 5 years.
I tell you if it gets today, you absolutely have to put it in your portfolio. Are you ready for that?
What price?
$97.
If it gets down to 97, I have to put. Should I just put the order in there right now at $97?
Yep, too low out there. Yep, because it won't trade lower than 96.
We don't promise anything on this show, though. Joel's saying it's not going to trade lower than 97.
Well, you're holding it for 6 years, so
I'm holding it for maybe 20. Well, I don't know how many years I got. I'm 41 here now. Hopefully, I got another 20 or 30 years. But I'm planning on holding this long term.
Dennis, I'm buying the 75 calls and you all day long. Just an iceberg.
You think so? You think I can make 75?
Oh, all right. Let's at least
pretty hyper guy for 75. We'll see.
Pair lows at 97.12 and 97.19. This was back a long time ago. This was back in June of 2016. And another low at 96.06. So, folks, when I'm looking at these things, I'm just looking at prior lows. I'm not trying to be a rocket scientist. I just want to see where the past history has been in the stock. And that was some price action from June. And after the thing went up to 145 or 147.17, just think the opposite hat. What if you were short this thing this whole time, or short from the 135 level, or short from the 125 level? And also, these things aren't supposed to move on earnings as much. So I think this is a double whammy in Celgene. And I agree with you long term. I just little hesitant to put Biotech.
It's funny. I just had another person message me. I don't even think they're listening to the show. Just another trader, and they say Celgene's got to be a buy at 100, doesn't it? That makes me almost scared. There's so many people that are looking at this 100 level like I am, but I don't know. Down $20. I'm the contrarian trade has not been the trade though. So you have lost a lot of money just trying to buy these dips. I'll tell you that. You could have set it at 119. So as a trade here, absolutely not coming into it as a trade. As an investment, though, oh man, I'm licking my chops looking at Celgene under $100. You're grabbing one of the great biotech growth companies still. Still a lot of drugs in that pipeline there. And you're going to get it at a multiple. Okay, well, they're lowering guidance. What did the guidance go down to, Spencer? Let's figure out the multiple on this thing.
For Celgene?
Yeah, what the guidance go down to? They lowered it.
Yeah, let me pull it up real quickly here. So, Celgene
doing all look at this fundamental analysis.
They lowered their guidance.
Yeah, the people are going to stop listening to the show.
Yeah, they don't like fundies. They don't like technicals.
So
what do we got for me?
So the fiscal year adjusted EPS $7.30 to $7.35. And the revenue
they're looking at making $7 still.
$7, yes, for the fiscal year adjusted EPS. Revenue $13 billion to $13.4 billion.
Yeah, so $7 is trading with a multiple like 15, 16, and it's growing still. I mean, okay, yeah, they're low in guidance, maybe the growth, and I've talked about that a long time. When stocks stop growing, they can really fall off. Just think aging population, drugs aren't going away, and Celgene's got a great pipeline. I think it's a good deal.
All right, Quicken balances.
I'm not buying more in my investment portfolio today. I'll tell you that.
Quicken balances.
Oh, we haven't even looked at those yet. Let's go look. Oh, shocking. GE, 365,000 to sell. How many days? How many days in a row are we at? You got to go back and listen to all the shows. It's got to be like 2 months straight.
That's what Spencer's doing today.
GE. Maybe 2 years straight. It's just like GE has an eternal selling balance. Square, 63,000 to buy. Shocker. Alibaba, 26,000 to buy only. Well, that's pretty small. Twitter, 164,000 to buy. Hey, look at AT&T, 329,000 shares to buy in AT&T. Remember, Time Warner reported here today, and they reported an okay quarter, so that might be helping AT&T a little bit here this morning. Maybe some institutions looking at that action and saying, hey, Twix are going to be taking them over, and it's a pretty good quarter. General Motors, 38,000 to sell, which is interesting because Ford is obviously trading higher still. I still like Ford resistance 1239 to 1249. I think the book is littered. I think it struggles to get through there. The Caterpillar, 78,000 to sell. So Caterpillar with a big sell imbalance here. Bristol Myers, which reported is 49,000 to sell. Let's go look at Snap. I always like to look at the SNAP imbalance. It is only 2,400 shares, so it's basically nothing. That's about, there's some medium-sized ones, but the real standouts there for me, I see, are Twitter, really.
Okay. All right, Spencer, you want to wrap up this crazy Thursday show and preview what's on the docket for Friday?
Crazy show indeed. On tomorrow's show, we're joined by Phil Davis of Phil Stock World.
Phil's World.
Yeah, exactly right. But if you want to catch any part of our show from today, do that on iTunes, SoundCloud, and Stitcher. Don't forget to like us on Facebook at PreMarket Prep there. And you can follow Joel and Dennis on Twitter at Spoos for Joel and at Triple D Trader for Dennis. That is our show today. Hope everyone has had a good morning and hope you have a good rest of your day. We'll be back with you on Friday.